Ladies and gentlemen, the world of trading is changing before our eyes. Headlines scream about the end of stock trading in the United States, and the first reaction for many is panic, confusion, and doubt. But here's the truth. The market does not care about fear. It only responds to perception, and your perception, how you think about risk, uncertainty, and opportunity, is the only thing that can determine whether you survive and thrive or falter in this storm. This is not about predicting the end of trading. It's about understanding the psychological rules of the game, the principles that make some traders resilient, adaptive, and profitable, even when the world shifts beneath their feet. The traders who panic are not defeated by the market. They are defeated by their own inability to accept uncertainty. The reality is simple. Control what you can, accept what you cannot, and stay emotionally neutral amidst chaos. The headlines are loud, but your mind can be louder. The opportunities are real, but only for those who see them clearly and act with disciplined courage. Tonight, we're not just going to talk about news or policies. We're going to talk about your mindset, how to prepare your mind for uncertainty, how to navigate fear, and how to find opportunity when others see only the end. Because in trading, as in life, it's not the market that tests you, it's yourself. The moment you step into the markets, you are entering a world that thrives on perception, not reality. It is a world where the numbers on the screen, the charts, and even the news are nothing more than reflections of what traders believe, what they fear, and how they interpret uncertainty. The reality of the market, the true movements of money, opportunity, and risk, is always filtered through the human mind. If you fail to understand this, no strategy, no system, and no amount of knowledge will protect you from losses. But if you internalize this truth, you gain something far more valuable than any formula: freedom. Freedom from fear, freedom from reaction, and freedom to see the market with clarity that most traders never achieve. Most traders read the headlines and react. They see the screaming banner that says, "Markets collapse, stocks plunge, or trading ends," and their first instinct is panic. Their minds immediately conjure images of disaster, loss, and personal failure. But the headlines themselves are not the market. They are a reflection of other traders' perceptions, a reflection of collective emotion. The market moves not because of the news, it moves because of how people perceive the news. One trader sees a headline and panics, selling at a loss. Another sees the same headline and calmly positions, recognizing an opportunity. The difference between them is perception. One is enslaved by the illusion of certainty, the other empowered by acceptance of uncertainty. Perception shapes reality because every trade, every decision is first formed in the mind. The charts, patterns, and numbers do not create opportunity, they reveal it. But they do so only in the context of your belief system. If you believe that the market is ending, or that a particular move is too dangerous, you will act accordingly, often missing opportunities that are right in front of you. If you understand that markets reflect human behavior, probabilities, and uncertainty, you act differently. You recognize that no single piece of news can dictate your outcome unless you allow it to. This is the essence of trading mastery, the ability to separate perception from reality, to see the market clearly, and to act without emotional distortion. Every trader experiences this moment, the headline that triggers fear, the news that seems to confirm that the world is collapsing. Some will close positions, refuse to enter trades, or second-guess themselves endlessly. Others will pause, breathe, and ask a simple question: does this headline change the probabilities I am trading, or does it only change my perception? The answer to that question determines your survival in the markets. Perception is your lens, and if your lens is clouded by fear, impatience, or overconfidence, the market will exploit it. But if your lens is clear, disciplined, and rooted in understanding, the market becomes your partner, not your enemy. Consider this. Every crash, every boom, every shocking event in market history was first interpreted through human perception. The market does not have intentions or plans, it reacts to collective belief. Traders who anticipate, prepare, and control their perceptions thrive even in chaos. Traders who let the emotional noise dominate them fail, even when they have the perfect. No chart, indicator, or news feed can substitute for the ability to observe reality clearly and respond appropriately. That is why perception matters more than headlines. This does not mean that information is useless. It means that your interpretation of information matters infinitely more than the information itself. The news is a mirror of collective human belief, not a blueprint for action. When you understand this, you stop chasing certainty and start trading probabilities. You understand that fear in the market is a reflection of other traders' emotions, and opportunity often arises precisely where fear is strongest. You understand that panic is contagious, but so is calm observation. The challenge for traders is simple. Do not confuse perception with reality. Accept that the market is neutral. It does not punish or reward based on fairness or logic. It responds to human belief. If you want to thrive, you must take full responsibility for your own perception. You cannot control headlines, news, or other traders, but you can control your mind. You can train yourself to see clearly, to recognize probability, and to act without being influenced by noise. This is not theoretical, it is practical. It is the foundation of every successful trading career. Imagine a trader who reads the headline, "Stocks face historic collapse." The first reaction is fear. The heart races, the palms sweat, the mind imagines losses. This trader closes positions, avoids opportunity, and reinforces a mental pattern of fear. The perception becomes the reality because it dictates action. Now imagine another trader who sees the same headline but understands that the market moves on perception, not facts. This trader asks, what is the probability that this news changes the market trend I am trading? How are others likely to react? Where is the opportunity? The market has not changed. The trader's perception has. And because perception drives action, the second trader positions wisely, manages risk, and may profit where the first trader panics. This is the difference between surviving and failing, between mediocrity and mastery. Perception also shapes the emotional landscape of trading. Most traders are reactive. They are pushed around by every headline, every tweet, every rumor. Their reality is created not by the market, but by their emotional response to perceived danger. The successful trader, however, trains the mind to observe, not react. Emotional neutrality is not passivity, it is clarity. It is the ability to see uncertainty and ambiguity without fear. It is the recognition that the market is probabilistic, not deterministic, and it is the understanding that your perception, when disciplined, creates your own reality within the market. This mindset transforms trading from a game of fear into a game of mastery. It allows you to step back from the chaos, to see opportunity where others see risk, and to act with confidence in the face of uncertainty. It frees you from the emotional swings that destroy 95% of traders. It allows you to create rules that you trust, decisions that you own, and a mental framework that is resilient to any headline or event. Perception shapes reality because it determines your actions, and your actions determine your results. You cannot control everything the market throws at you, but you can control your perception, your preparation, and your response. That is the edge that lasts. That is the difference between those who survive, those who thrive, and those who are consumed by fear and noise. In closing, remember this: the market does not care about headlines. The market does not punish or reward based on drama. It responds to the beliefs, actions, and perceptions of its participants. Your goal as a trader is not to react to every story, chart, or tweet. Your goal is to master your own mind, to perceive clearly, and to act with discipline. When you do this, no headline can destabilize you, no rumor can mislead you, and no fear can control you. Perception is reality in trading, but it is a reality you can choose. You can choose clarity over fear, preparation over panic, and understanding over reaction. And when you do, you are no longer at the mercy of headlines. You are at the helm of your own trading destiny. In the world of trading, the most dangerous illusions are the ones that make you think you can control what cannot be controlled. The markets are a living, breathing organism driven by countless variables: geopolitics, policy decisions, corporate actions, and the emotions of millions of traders. You cannot predict these events with certainty. You cannot stop a sudden collapse, a shocking announcement, or a surge of irrational exuberance. The truth is uncomfortable but liberating. The market is beyond your control. What you can control, however, is your mind, your discipline, your rules, your response. And this distinction between what you can and cannot control is the line that separates traders who survive from traders who fail, the line that separates mediocrity from mastery. Most traders ignore this fundamental truth. They see a market move, a headline, a rumor, and immediately try to manipulate their positions, force outcomes, or predict the unpredictable. They believe that knowledge, strategy, or analysis alone can protect them from risk, but knowledge without acceptance of uncertainty is a trap. Understanding the market is not enough. Survival comes from aligning your mind with the reality that much is outside your control, and that mastery comes from controlling what is yours to control: your perception, your decisions, and your discipline. Control, but you can. Accept what you cannot. This simple statement is deceptively profound. Control what you can, and you create a framework of certainty within uncertainty. Accept what you cannot, and you eliminate fear, frustration, and emotional chaos. The first part is active, the second is passive, but both are essential. Without control, you act recklessly. Without acceptance, you suffer unnecessarily. Together, they create the mental equilibrium necessary to trade profitably in a world of uncertainty. Control is not about manipulating the market. It is not about predicting outcomes or forcing trades to behave the way you want. Control is about designing your process so that it is independent of outcomes. It is about setting rules for entries, exits, and risk management that you can trust under any market condition. It is about being so clear on your strategy and so disciplined in execution that when the unexpected occurs, your mind does not collapse. You do not act out of fear. You act in alignment with your preparation. Acceptance, on the other hand, is not resignation. It is not giving up or avoiding responsibility. It is understanding that certain forces, market moves, geopolitical shocks, regulatory changes, and even sudden volatility, exist outside your sphere of influence. You cannot control them, and you cannot predict them with certainty. But if you accept them, you no longer waste energy resisting them. You no longer allow surprise or fear to dictate your actions. Acceptance turns the chaotic world of markets into a canvas of opportunity. Because when you are not emotionally enslaved by what is out of your control, you see clearly what is within your control. Consider a trader who focuses only on outcomes. This trader watches every tick, reacts to every headline, and attempts to force trades to conform to expectation. When a sudden drop occurs, panic sets in. Positions are closed prematurely. Opportunity is missed. Emotions dominate logic. The trader is acting as if the market owes them a particular result, and when it does not deliver, frustration and fear take over. This is the trap of trying to control the uncontrollable. Now consider a trader who focuses on process, rules, and discipline. This trader sets clear risk parameters, entry criteria, and exit plans. When the same drop occurs, the trader does not panic. They follow their plan. They manage risk. They accept that the market will move in ways they cannot control, and they understand that their job is not to predict or manipulate, but to respond appropriately. The result may be profit or loss, but the trader remains emotionally neutral, intact, and prepared for the next opportunity. This is mastery. Control what you can by defining your edge. What is your process? What are your rules for entering and exiting trades? How much risk per trade can you tolerate? What behavior is non-negotiable? When you answer these questions and adhere to them with consistency, you create certainty within uncertainty. You transform trading from a reactive endeavor into a proactive practice. Are no longer a victim of random market movements, you are a participant with discipline, patience, and clarity. Acceptance is the mental armor that protects you from events outside your control. It allows you to watch volatility, news, and unexpected shocks without panic. It prevents you from overtrading, revenge trading, or chasing losses. Acceptance is not about predicting outcomes. It is about understanding probability. The market is probabilistic, and your job is not to know the future but to manage your present effectively. When you accept that outcomes are uncertain and focus on the quality of your decisions instead, fear loses its grip, and emotional stability becomes your greatest EDG. Many traders fail not because they lack skill or strategy, but because they fail to distinguish between control and acceptance. They try to control the uncontrollable and resist what is inevitable. This creates emotional tension, hesitation, and impulsive behavior. The more they fight reality, the more they lose. The more they accept reality and control their responses, the more consistent their results become. Trading is not about winning every trade. It is about surviving, thriving, and creating a process that is resilient under all conditions. Control and acceptance are also inseparable from risk management. You cannot control the market, but you can control your exposure. You cannot control sudden news, but you can define the maximum loss you are willing to accept. You cannot control volatility, but you can structure your trades to withstand it. Every rule, every position sizing decision, every stop loss is a way to exercise control. Every moment of acceptance, every acknowledgement of uncertainty is a way to maintain emotional balance. Together, they create a trading system that is unshakable not because it predicts the future, but because it aligns with the trader's own psychology. Mastery of control and acceptance extends beyond trading, it permeates life. When you realize that the only thing you truly control is your mind and your actions, you stop blaming circumstances, markets, or others for your results. You take full responsibility for your success. This mindset transforms fear into clarity, chaos into opportunity, and uncertainty into a field where your disciplined decisions can flourish. The path to mastery begins with self-awareness. Recognize what triggers your fear. Recognize what compels you to act impulsively. Recognize the news, the volatility, or the noise that you have been trying to control. Once you identify it, practice the discipline of control in your process and the art of acceptance in your perception. Control what you can and accept what you cannot. Repeat this practice consistently, and over time, your mind becomes your greatest asset, far more valuable than any system, chart, or strategy. Every trader faces moments of chaos. Every trader will encounter shocks, surprises, and losses. The difference between those who fail and those who thrive is not the absence of uncertainty, it is the ability to act effectively within it. The trader who controls what they can and accepts what they cannot has a mental advantage that cannot be shaken by headlines, fear, or unexpected events. They are not slaves to the market, they are masters of their own perception and decisions. In conclusion, the market will always be unpredictable. Events beyond your control will occur, headlines will scream, prices will spike and collapse. But your mind can remain steady. You can control your process, your rules, and your discipline. You can accept the uncertainty, the probability, and the uncontrollable forces around you. When you do this, fear loses its power, clarity takes over, and opportunity becomes visible where others see only chaos. Control what you can, accept what you cannot. This is the foundation of trading mastery, and the principle that separates those who survive, those who thrive, and those who are consumed by uncertainty. Chaos is the natural state of the market. Prices surge, tumble, gap, and reverse. Headlines scream, rumors circulate, and volatility erupts without warning. Most traders look at this environment and see danger, fear, and uncertainty. They see a world where loss is inevitable and where success is fleeting. But the reality is far different. Chaos does not destroy opportunity, it reveals it. It magnifies probabilities, exposes edges, and tests the mindset of every trader. Those who panic is it. Those who act wisely seize it. The distinction is entirely psychological. Opportunity is never separate from chaos. It exists because of it. The first step to seeing opportunity in chaos is understanding that the market is always neutral. It does not reward or punish fairness, logic, or knowledge. It responds to perception. It responds to behavior. It responds to belief. Chaos is the canvas upon which opportunity is painted. When prices move violently or unpredictably, it is not the end of trading, it is the beginning of potential. Traders who recognize this see that the market's erratic behavior is not their enemy, but their teacher. It tells them where uncertainty lies, where human emotion dominates, and where edges are strongest. Most traders make the mistake of seeking certainty in a world that offers none. They cling to patterns, predictions, and strategies as if they could create order from chaos. When the market refuses to cooperate, they panic. When it shocks them, they overreact. When it reverses against them, they feel betrayed. But the truth is that chaos itself creates opportunity because it exposes the weaknesses and strengths of all participants. The trader who can remain calm, observant, and disciplined in the face of chaos sees clearly what others cannot. They see that fear and greed are amplified, that overreactions create mispricing, and that probabilities are shifting in real time. Opportunity, in its purest form, exists in these moments. Consider the nature of a market spike. Prices surge violently in one direction. Most traders react emotionally. They chase the move, fearing missing out, or they flee, terrified of loss. Both responses are rooted in emotional reaction, not objective assessment. The trader who sees opportunity in chaos pauses. They do not react to the noise. They observe the behavior of other participants. They ask themselves, where is the imbalance? Where is risk overextended? Where are traders acting irrationally? In these observations, they discover positions that are mispriced, volatility that is exploitable, and edges that are invisible to the panicked crowd. Opportunity in chaos is also about probability, not certainty. The market never guarantees outcomes, but it does offer patterns of behavior that repeat under stress, fear, and surprise. When volatility spikes, the probability of overreaction increases. When uncertainty reigns, traders who cling to fear make mistakes. Recognizing this allows disciplined traders to position themselves advantageously. They do not predict outcomes, they prepare for probabilities. They do not attempt to control the market, they control their risk and their response. In chaos, they act while others hesitate, they exploit while others panic, and they see where others are blind. Emotional neutrality is the key to exploiting chaos. When prices are wild and headlines are alarming, most traders are enslaved by their own fear or greed. They act impulsively, make irrational decisions, and compound mistakes. The trader who is emotionally neutral, however, treats chaos as information, not threat. They observe the reactions of others, measure probabilities, and act only when their process aligns. Their calm mind in a world of panic is the true edge. Opportunity cannot be separated from this mindset. Chaos is not a barrier. It is a magnifying glass, revealing where the probabilities favor those with control and discipline. It is also important to understand that chaos is not random. It is the result of human behavior amplified. Markets are populated by millions of participants, each reacting to fear, greed, hope, and uncertainty. When panic spreads, overreactions occur. When euphoria spreads, mispricing appears. The chaos itself is the outcome of human psychology. Opportunity exists for those who understand this. It is not about predicting headlines or geopolitical events. It is about recognizing patterns in behavior, identifying where emotion dominates rationality, and positioning accordingly. Those who ignore this fundamental truth are blind to the very opportunities that chaos creates. The most successful traders do not wish for calm, predictable markets. They understand that the predictable, quiet environment produces no edge. It is in the storm, the unexpected, the volatile moments that opportunity is richest. When prices swing violently, liquidity is abundant, and participants act irrationally, edges appear everywhere, but only to those who can see them. Traders who attempt to avoid chaos are attempting to avoid opportunity itself. The market is never static, risk is always present, and where risk exists, so does the potential for reward. Recognizing this is not theoretical, it is practical survival. Opportunities in chaos are also a test of preparation. Traders who have disciplined processes, clear risk parameters, and mental control can act decisively. Traders who are unprepared are paralyzed. The chaotic market does not discriminate. It amplifies both success and failure. Preparation is not about predicting the exact movement. It is about creating a system that can adapt to any movement. It is about having rules you trust, positions you can manage, and the mental clarity to act when the crowd panics. Chaos rewards the prepared and punishes the unprepared. Timing is critical in chaos. The window of opportunity is fleeting. When emotion dominates the market, positions are mispriced for moments that can last minutes or hours. The trader who can recognize these moments, act decisively, and manage risk captures opportunities that disappear as quickly as they appeared. Most traders are reactive. They hesitate, second-guess, and miss the chance. The disciplined trader, however, thrives precisely because they understand and that chaos is temporary, but opportunity is embedded within it. The ability to act decisively without emotion is what converts chaos into profit. Every trader will experience chaos. Every market will surprise, shock, and challenge. There will be gaps, spikes, crashes, and reversals. The question is not whether chaos will come. It is how you respond when it does. Do you allow fear to dominate? Do you hesitate, panic, or flee? Or do you see the market for what it is, a reflection of human behavior, an arena of probabilities, and a canvas of opportunity? Your response, your mindset, and your discipline determine whether chaos is your enemy or your ally. Opportunity exists in chaos not because the market is predictable, but because human behavior is repeatable under stress. Panic triggers certain predictable reactions. Greed amplifies certain patterns. Mispricing and overreaction are inevitable when fear and uncertainty dominate. The trader who can observe, measure, and act in alignment with probability sees this. They understand that the market does not reward certainty, it rewards the disciplined exploitation of opportunity. And where others see disaster, they see possibility. This is the ultimate lesson: chaos is inevitable. Emotional reaction is predictable. Human behavior under uncertainty creates edges for those who are prepared. The trader who masters their mind, controls their response, and accepts uncertainty can see opportunity where others see only risk. Chaos is not a barrier, it is the environment in which mastery is forged. It separates the reactive from the proactive, the fearful from the disciplined, and the ordinary from the exceptional. In conclusion, remember this: the market will always be chaotic. Prices will swing, volatility will spike, and headlines will scream. Most traders will panic, overreact, or hesitate. But opportunity exists precisely in these moments, for those who can observe clearly, manage risk, and act decisively. Chaos is the medium through which probability and opportunity are revealed. Fear is a signal of potential mispricing. Emotional neutrality is the key to exploitation, and preparation is the bridge that connects observation to action. Opportunity does not wait for calm. It is born in the storm. It exists in the moments of uncertainty that test every trader's mind. Those who recognize it, embrace it, and act upon it will find that chaos is not a threat. It is the greatest teacher and the richest environment for profit. The market rewards those who can navigate uncertainty, see clearly amidst confusion, and act with disciplined courage. Chaos is constant, opportunity is constant. But only the disciplined, prepared, and emotionally neutral trader can transform chaos into success. The market is neutral. Headlines: chaos and uncertainty do not define your success. Your perception, discipline, and mindset do. Control what you can, your process, your rules, your decisions. Accept what you cannot: sudden moves, volatility, and unpredictability. In every shock, every reversal, every moment of chaos, opportunity exists for those who remain calm, observant, and prepared. Mastery is not about predicting the market, it is about mastering yourself. When perception aligns with discipline, fear loses its grip, clarity emerges, and opportunity becomes visible. Your mind is your greatest edge. Use it, trust it, and the market will reward you.